and a lot of times when it can be worse, quite frankly, than what it would typically tell you, and that's going to be volume. I always have volume on every single one of my charts because I think it's not just about can you identify a key place with which to execute your trades or a key price area where others are executing their trades, but you're also going to want there to be an indication that it's actually happening. It's all well and good to point at a line in a chart or an indicator and say, hey, look, this looks interesting at this price level, but if nobody else cares and the executions aren't there, then it's really not all that significant. So I want to start with something almost pretty simple here with DWAC, because, hey, DWAC's moving around, obviously, today. And the first thing you'll see is I like these obvious things, starting points like this 50 level. So look, you get the wick. There's your typical rejection candle. You're getting a lot of wick tops in here when it finds a resistance. This is 50, wick top, rejection. You're going to see another wick top rejection at 48, and then you're seeing the obvious resistance over there on DWAC. But what you're also noticing, when it fails that high, look at the transaction volume when it fails it. Now, anybody that's been following the markets, you know the two biggest volume events of the day, typically speaking, are the open and the close. So if you're doing more volume on an individual candle at 9, like this 3-minute candle here at 9:39, than you are at the open, that's significant. So when it rejects this breakout, there's a lot of people transacting there. You probably ran a lot of stops, some stop breaks long. A lot of people running to the exit when it broke as well. And then a lot of sellers joining this to the downside, so you get a big move into the downside. That's what you want to see. You want to see that relative volume at that price level, giving you the confluence, showing you that there are significant traders at that price level. And I'll give you an example here. Let's look at something else which went a little bit ham today, for lack of a better term. You know what's up. Snowflake. It's a strong trend to the upside. And in this particular case, look, you get a press to the upside, you get a very clean triple top here, and then you've got yourself a reversal candle. Now here's an example where, okay, it works to use this failed break as a short back into VWAP. Right. But the upward trend still continued higher. So this is an example where it might not be as good as you would expect to short based on the volume. Look at the amount of volume you have creeping into it on a little bit of news. And then as it gets to the high, see the volume taper off. And when it makes that break down, you're actually doing less volume as it's failing that high. So lots of volume into it, not a lot of volume failing it. It's not like you're trapping a bunch of people. And what happens? It goes a little bit, catches a higher low, and then resumes the trend back to the upside. Now, if you happen to sit this one out, it's not a bad indicator for you that, hey, it's got some strength potentially in it. What happens if it does a little bit of a reversal and it ends up joining the trend in there? It's a lot easier to join a trend without needing a tremendous amount of volume than it is to look for a trend reversal without volume behind you, because the trend is your friend. The trend is lower hanging fruit. You need more reasons to go against the trend than you should need to go with it. That's why I think the volume indicator is going to be a good one for you, because buying the dip here, you didn't get a big volume spike on this reversal wick. If we come to the chart, you didn't get a very big volume spike on that reversal wick, but you had a double bottom, higher low. It's a lot easier to join what is a forming trend than it is to fight it. Now, I'm going to show you, I love examples like this because one of the best things a trader can do is learn from their mistakes. So I'm going to set this one up for you. Rivian was making lower highs. You guys can all see this. There's one high, there's another, there's the third at VWAP, and into a flat bottom break as well. So that sets up that short in here. Now, the way I was looking at this trade was yesterday's resistance. That's about 16 bucks. I'm looking for support off that. And if it starts holding this resistance level, then I think this is rejecting the same double top, but on the higher time frame, holding previous level, and then potentially going higher for the rest of the day. So in the back of my mind, that's what I think can happen. But when it makes that bounce in front of this resistance level, what doesn't happen? See, it makes that bottom. There is the big volume candle, the biggest one it had had in a half an hour. Then the buying steps in. I'm like, okay, that's where I was looking for the buyers. Let's jam out of the trade. We got the confirmation. The buyers where we thought we are. Just take it and run. That's it for the long trade. It's probably going to get into VWAP. Maybe we can short it back there again at VWAP if we like it. But there was no volume on that reverse. If it's such a key price level, which is why I was getting out, then why weren't there a lot of transactions? Like, look at the volume as I'm getting out. It's literally doing the least amount of volume for this so-called accumulation in front of support. Nobody was trading there. So what happens to Rivian? It just resumes the trend that it was on. So I get out looking at that key price level. That's one that could have carried a little bit longer. It's not to say that I would never cover in a situation like that. But hey, when you look at the volume transacting, it can give you a little bit of a hint. And that's all you need for the trade. You should always look for reasons to hold on to trending trades and reasons why you might not like going against the grain. Now, volume in this particular case, it would have been a reversal. You got the big move down in. It kind of rejects that low into that support, but there was no transacting volume. You see it roll back over and just continue to head lower. Volume is a very, very important indicator, and it's not just on these, like a 3-minute chart or a 15-minute chart that you should be looking at it. You should doubly care when you're looking at bigger, broader levels on the daily chart. And that's what I want to leave you with. If you don't have volume as an indicator on, one or two of your charts, I think it's an absolute must when you're popping up your daily chart. You want to see, when you're looking for those big key levels with which to transact off of, what is happening at those levels. Is there really a lot of shares changing hands, and is there a lot of interest at those key prices? When you see something like Rivian at the 15, lots of selling into it. It holds the volume when it's bouncing off a said level. And when it runs away from that level, the volume starts to taper off. And it's the same thing that happened as it got into the 15 level today. We'll see if it ends up closing, continuing to do bigger relative volume when it's underneath 16 in front of that 15. But it's giving you some confirmation that these 15, like underneath 16 into 15, is an interesting and good buy zone for Rivian for those scalp trades. So a lot of times we're always looking at chart patterns and we love trends and all that good stuff. Make sure you've got volume to give you the confluence for those trades. It can be a good reason why a decent setup might not be as good as you think, or why a good setup could be a great setup because you've looked at that excess volume when trading around those key prices. So that's the real deal today. Make sure you got volume on your charts. You need liquidity to trade. And volume is the indicator that's going to give you the idea of where it is.